Ladies and gentlemen, good day and welcome to the Welspun Living earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Prerna Jhunjhunwala from Elara Securities Private Limited. Thank you and over to you, ma'am.
Thank you, Rohit. Good evening, everyone. On behalf of Elara Securities Private Limited, I would like to welcome you all to Q2 and H1 FY24 post-results conference call of Welspun Living Limited. Today, we have with us the senior management of the company, including Ms. Dipali Goenka, Managing Director and CEO, Mr. Sanjay Gupta, CFO, and Mr. Salil Bawa, Group Investor Relations Head. I would now like to hand over the call to Mr. Salil Bawa for initial remarks, post which we can start the Q&A session. Thank you and over to you, Salil.
Thank you, Prerna. Good afternoon to all of you. On behalf of Welspun Living, erstwhile Welspun India Limited, I welcome all of you to the company's Q2 FY 2024 earnings call. Along with me, we have with us today Ms. Dipali Goenka, Managing Director and CEO, and Mr. Sanjay Gupta, Chief Financial Officer. We hope you have had a chance to review the investor presentation that we filed with the exchanges today. It is also available on our website. During the discussion, we may be making references to this presentation. Please do take a moment to review the safe harbor statement in our presentation. As usual, we'll start the forum with opening remarks by our leadership team, and then we'll open the floor for your questions. Once the call gets over, should you have any further queries that remain unanswered post the earnings call, please feel free to reach out to us. With that, I would now like to hand over the floor to Ms. Dipali Goenka, Managing Director and CEO. Over to you, ma'am.
Thank you, Salil. Good afternoon, everyone, and thank you for taking the time to join us today for a Q2 FY24 analyst call. I would like to share some perspectives on the operating highlights of our performance during the quarter under review, after which Sanjay would share some highlights from our financial matrix. Firstly, as informed, last quarter, the process for change of our name, Welspun Living Limited, is now complete. The move resonates with our intent to transform from a pure B2B to also a B2C-oriented company. The new brand identity, Welspun Living, not only reflects the current business verticals, but opportunity to grow in related areas as a complete home solution provider. We are pleased to share that we have seen our revenues jump to an ever quarterly highest of 2,542 crores, growing by 19% Y-on-Y and 15% Q-on-Q. The upcoming holiday season in US has led to increased buying from all major retailers. Consequently, we witnessed higher capacity utilization on the back of season rollouts at 80 to 90% for our terry towel, bed sheets and rug units. We have also achieved highest EBITDA of 391 crores in the last 8 quarters, clocking 15.4% in Q2, growing to 158% Y-on-Y and 15% Q-on-Q. Annualized ROCE has improved substantially to 14.6% from 5.7% last year. As per the UTEXA data, India has gained back its market share in exports to US for the Jan to August 2023 period, from both in TT from 40 to 45 and bed sheets from 51 to 58%. We are keeping a close watch on all the 3 C's, cotton, coal, container. As we know, post-COVID, commodities have remained dynamic. We have strengthened our internal governance to ensure that we are minimizing impact due to any untoward price volatility, both in short term and medium term. We continue to be cautiously optimistic of the operating performance for the remaining part of FY24. Though the global slowdown estimates and worries still persist, we are committed towards meeting our directed revenue growth of 10 to 12% for the year and 15% EBITDA. I would like to share some light on the updates for major business segments, starting with the export markets. Globally, the growth has moderated to 2.6% in Q3 and 3.3% in 2022. USA is, however, a market showing resilience, with GDP in Q3 expected to expand at 4%, despite banking crisis and rate hikes. US retail sales show resilience in Q3. It grew 3.8% Y-on-Y in September 23, 0.7% MON in September 23. Inflation, though, has affected consumer purchasing power to some extent. Inflation is at 3.7% as compared to 3% last quarter. For the upcoming holiday season in US, we have witnessed increased inflow of orders during the quarter. Export revenues for Welspun saw a growth of 22% year-on-year, with the innovation products growing at 67% Y-on-Y. Our deeper customer connect across major international retailers is reflected in the increased share of shelves as compared to pre-pandemic levels, both in bed and bath categories. The global economic scenario is expected to be volatile. With the recent Israel-Palestine conflict, it has added to the overall complexity, though our direct impact is minimal, but that it may potentially affect global economic sentiments, which is something we are keeping a close watch on. Closer home, the Indian market has been resilient during the recent global turmoil, with expected GDP growth of 6.5% and inflation at 5%. However, recently there has been volatility in inflation owing to huge price hikes and different essentials leading to a dampening of retail sentiment. In Q2, as in Q1, at retail level, we have witnessed relatively lower footfalls and offtakes within the consumer, general merchandise and apparel space. In this time of inflation volatility, the consumer is prioritizing essentials rather than discretionary products. Despite the transient challenges in the market, Welspun's domestic consumer business sales remained flat for Q2. Brand Welspun continues to strengthen its leadership position and is mostly widely distributed home textile brand in the country, with presence in 600 plus towns and 15,511 outlets, up by 2,246 in Q2, a reach not hitherto achieved by any home textile player in India. Brand Spaces has outgrown the category in modern trade channel, emerging as a leading brand within the category and gaining market share. Despite the continuing investment in marketing and relatively weaker retail market sentiments, the home textile consumer business continues with its streak of positive EBITDA in Q2. We remain committed to continued investment in our brands for improving brand visibility and salience, which shall be prominent in the upcoming festive season. With the consumer sentiment improving, we expect B2C segment posting a good growth during the coming months. We remain committed towards our focus to build profitable business growth in the domestic consumer business. Our emerging businesses of domestic consumer business, global brands, advanced textiles, flooring businesses grew 28% in Q2 Y-on-Y and 15% Q-on-Q. Our global brands include licensed brands like Martha Stewart, Creative Collab, and Disney, and own brand Christie continued its upward trajectory and grew 27% Y-on-Y. Licensed brands have given us an edge in US and European markets by opening up new avenues, and total brand share of our sales has jumped up to 17% as compared to 12% in 2021. In flooring business, we have witnessed big ticket orders for soft flooring in UK, with a bulk order inflow coming in from USA. In hard flooring in Q2, we have witnessed good order flow from US and Middle East markets and have made inroads into African markets. Overall, our flooring plant reached a capacity utilization of 63% during the quarter, with record revenues of 243 crores, growing by 52% Y-on-Y. EBITDA also continues to grow, reaching 8.3% in Q2 on the back of increased revenues and better operating leverage. As shared in the last quarter as well, we are witnessing a push towards the China Plus One strategy in major global markets and with a focus on complete traceability of the supply chain. In order to capitalize on the market opportunities, we are working on indigenization of a complete value chain. On domestic market front in flooring, we continue to see growth in commercial and institutional segments. We have executed one of the largest wall-to-wall order in India for Bharat Mandapam, which hosted the recently concluded G20 summit. Residential segment continues to pick up traction in all our key markets. The advanced textile business witnessed a 15% growth Y-on-Y in Q2 FY24. We have expanded into newer territories and customers despite large-scale offloading by Chinese and Turkish competition. Welspun's Spunlace is now also approved for innovative medical applications, which has opened newer avenues. On the ESG front, we are glad to inform that the solar power JV with CleanMax has started operations in Vapi. The 30-megawatt solar plant at Anjar is also nearing completion and shall be operational soon. We are also taking steps to further our agenda of our renewable energy goals by 2030 through JVs to set up more solar and hybrid power plants. ESG is embedded in every aspect of operations at Welspun, keeping us ahead of our peers globally in sustainable practices. With this, I would now like to hand over to Sanjay, who will take you through the financial highlights. Thank you.
Thank you, Dipali, and greetings everyone. I will give a brief overview of financial numbers for quarter 2 financial year 24 before we open for question and answer. During quarter 2 of financial year 24, we reported highest ever quarterly revenues of 2,542 crore, up 19% year on year and 15% quarter on quarter. For H1 of financial year 24, revenues is at 4,754 crore, which is up 16% year on year. EBITDA margin for quarter 2 stood at 391 crore, that is 15.4%, highest in last 8 quarters. It is up by 158% year on year, that is 829 basis points and 15% up quarter on quarter. For H1 financial 24, EBITDA is at 733 crore, 15.4%. It's up by 125% year on year, which is 751 basis points. Cotton, being the major input cost, has become relatively stable, albeit at a new higher level. The consistent profitability reflects the work that the company has done across all operating areas, be it cost rationalization, value engineering, developing new innovative products, or winning new marquee programs from customers. Profit after tax, after minority interest for the quarter, is at 197 crore, vis-a-vis 9 crore year on year and 162 crore last quarter, increased by more than 22 times year on year. For H1, PAT is at 357 crore versus 31 crore of H1 financial year 23, up by almost 12 times. Consequently, our consolidated EPS for quarter 2 stood at 2 rupees 4 paisa per share as compared to 8 paisa per share in quarter 2 of financial year 23 and 1 rupee 66 paisa per share in quarter 1. For H1 of 24, EPS is 3 rupees 70 paisa as compared to 31 paisa of H1 in the previous year. On the forex front, our average exchange realization for the US dollar during quarter 2 was 83.35 compared to 80.79 in the corresponding quarter last year. At the end of quarter 2 of financial year 24, our net debt stood at 1,573 crore, 425 crore lower than 1998 crore a year ago, and 242 crore lower than 1815 crore in quarter 1. It is slightly up by 40 crore from 31st March end due to slightly elevated working capital requirement. In first half of financial year 24, we have spent 168 crore towards capex, majorly towards the setup of 30 megawatt solar power plant at our Anjar facility. We have a stated objective to be 100% renewable energy by the year 2030. In this direction, we are pleased to share that the Board of Directors in their meeting held today has approved, after due evaluation of various proposals presented, an investment of 56.4 crore in a special purpose vehicle for supply of 47 megawatt of renewable energy round the clock RERTC basis for Anjar operations, which will make the company's Anjar unit about 80% renewable energy by 2026 and would be a significant step towards our journey to reach 100% RE by 2030. The company will hold about 27% equity share capital of SPV, which will set up a 150 megawatt of solar plus wind plant to supply the said RERTC. This arrangement is at the most competitive rates to the company and is also appropriate from capital allocation point of view. Coming to segmental results, Q2 core business home textile revenue stood at 2,352 crore versus 2,011 crore in Q2 of 23, up by 17% year-on-year and 15% quarter-on-quarter. For first half of 24, revenue for core business was at 4,390 crore, up by 14% year-on-year. Q2 EBITDA of home textiles stood at 359 crore at 15.3% as compared to 6.3% year-on-year and same as quarter-on-quarter. For H1, EBITDA for home textiles stood at 672 crore at 15.3%, up by 756 basis points year-on-year. During Q2 of financial year 24, revenue from flooring business was 243 crore, up by 52% year-on-year and 8% quarter-on-quarter. EBITDA is at 20 crore, that is 8.3%, which is the highest ever quarterly EBITDA for flooring as compared to 2.6% last year. For first half, flooring revenue was 468 crore, which is also up 42%, and EBITDA is at 38, which is also at 8.2, which is up 628 basis points year-on-year. With this, I will leave the floor open for question and answer. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Good afternoon, sir. Congrats on record results, mainly on the top line front, and very good performance on the flooring front. A few questions. If I see the capacity utilization, it has been increasing dramatically for last 2 quarters. And in the September quarter, the bath linen has crossed 90, rugs and carpets 98, and bed linen was 81. So considering the current buoyancy in the US market, should we expect second half to be at a similar level? What's the outlook?
So the outlook, thank you, Bhavin, for the question. And the outlook, we will say that we are cautiously optimistic and we are committed to the growth of around 10 to 12% on the top line and 15% EBITDA. And the capacity utilization will be the same. However, we might look at, some kind of debottlenecking of our capacities. So that is something, we would be exploring as we go forward.
How much time this would take, debottleneck? So debottlenecking, you're mainly looking on the bath linen side, right?
So we would be exploring it, looking at the demand, but, we will explore and there could be an opportunity for little investments that could be explored and that could be on the cards. But we are just exploring that. But looking at the prudence on ROC and IRR.
Second, on the flooring side, you mentioned in the opening remarks there were some orders, I think mostly from US or UK you mentioned. So were these one-off type of orders, or they are going to continue going forward, and we'll see the sales momentum going up as well as margin sustaining? So the question was, these were not short-term orders like only in the quarter, the same run rate would continue going forward?
Yes, the run rate will continue. In fact, we are going to be looking at kind of, our capacities will be maintained at the same. And it is also on the back of the China Plus One strategy. I think we are seeing an opportunity there. The whole traceability and, being the most modern plant in this part of the world actually gives us that advantage. And definitely that is something owing to that, we will continue to see this kind of capacity utilization and orders. And this is not one-off, this will be consistent.
Yeah. And the last one on the balance sheet side, there were some receivables outstanding from government on the incentive part and the other. How much has been received in the quarter? And as on the closing balance sheet date, how much receivables are pending now?
So we have been consistently getting, Bhavin, the incentives due from the government. And it is at the same level that we had in quarter 1 or quarter 4 of last year. So there has not been any increase.
Okay, thank you. Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Tarang Agarwal from Old Bridge Asset Management. Please go ahead.
Hi, good evening. A couple of questions from my side. One on the flooring and the second one on the domestic B2C textile business. So on the flooring business, your unit realization seemed to have fallen substantially. What's driving this? Is it a conscious effort to, gain market share, utilize the benefits of additional operating leverage? So that's one. And the second one on the domestic B2C business, I'm not sure, but did I hear it correctly? Is this business burning any cash on a quarterly basis? That's number one. And number two, how are you managing the supply chain to, fill your MBOs?
Okay. So, hi, Tarun. So flooring business, no. So the UVR is a factor of many things. So we have hard flooring, soft flooring, and then within that also there are various categories. So it is a mixed change that may have been seen. There has been higher capacity utilization, higher sales. So of course there has been a mixed change. And that might have impacted it slightly, not to a large extent. So the UVR is not an issue. On domestic B2C, as Dipali mentioned, we are into positive EBITDA, so we are not burning cash. We are investing in marketing consistently each quarter, about 9 to 10%, which we are continuing to do, but we are not burning cash there. On supply chain?
Yeah, I'll take this up. So for the supply chain for the MBOs, we have a distribution network that we have across the country, and we have over 200 sales staff across the country that help the distributors to reach to the dealers. So that's the way we work with the MBO network. Along with that, we have a technology support as to reach out on the beat plan and the whole reach out plan as well. So from Kashmir to Kanyakumari, from west to the east, we have a complete network plan, and it is all supported by technology here. Karan.
Okay, just ma'am, if I may, you spoke about distributors. What's the number of distributors right now which are helping their MBOs?
We have around 125 distributors here, Tarang, right now, and they are growing stronger.
Super. And just to follow up on the flooring business, sir. So you did mention that we haven't seen a realization yet, but if I look at the March 23 quarter, we were at about 1.5 million square meters, which gave us about 210 crores of revenue. And if I look at September 23, we're at about 2.8 million square meters. And the revenues moved up from 208 to 240 crores. So that was the source of my question.
Correct.
I understand mix change, and yeah, please go ahead, sir.
Yeah. So as I said, so mix has changed. So in March 23 quarter, the mix was different, and in this quarter, the mix is different in terms of hard and soft tiles. We can give more details offline too.
Sure, I'll do that. Thank you and all the best.
Thank you. The next question is from the line of Biplab Debarma from Antique Stock Broking. Please go ahead.
Good evening and congratulations on the excellent performance, ma'am. My first question is on FTA. So how do you see the impact of UK FTA on home textile, especially on Welspun India? And typically, what do you think it will from ratification of FTA to finally getting orders from UK? Typically, how long will it take? And do you see this UK FTA extending to EU FTA?
So,
yeah, that's my question.
Okay, and any other thing? You can continue and then I can ask.
No, thank you, ma'am. This is my first question on FTA. Yeah.
So FTA, I think UK FTA is a great opportunity, and as you know, UK contributes around 10% of the home textile demand. And definitely, this opportunity is going to be good for us in the terms of not only just towels, but sheets. And I think that's going to be a kind of a clear upside. And when you talk about the orders kicking in, it is a matter of when it kicks in and when the FTA is approved. We will see a matter of 6 months when this starts coming in.
And do you see EU FTA following suit, or is these two would be two different ballgame altogether?
I think that
EU
I think is not something that we see right now, but I think UK is something that we are seeing, and that is something is definitely kind of top on the cards, and also it consumes the highest consumption after United States of America.
Okay. Then my second question is, in the beginning you mentioned you maintain 11-12% growth guidance. Now if I see the number, operating revenue is already 4,693 crores. And if you assume the second half would do same as first half, then automatically the growth would be more than 15%, if my calculation is correct. So are we seeing second half big growth, or if second half is better than first half, then the growth should be operating revenue would be more than 15%. Am I missing something?
No. I actually will still maintain, the growth target that we're talking about, 10 to 12%, and the EBITDA of 15%. Let's be looking at the kind of overall global scenarios here, And you don't know with the kind of, the Israel-Palestine conflicts and the other conflicts that are happening, what comes on staring at our face. But, amidst all this kind of scenario that we are going to maintain what we have committed. That is 10 to 12% top line and 15% EBITDA.
Okay. And the third thing is, ma'am, if it doesn't have direct impact on Middle East war, and if FTA comes through, your capacity utilization is at a level, and if we maintain the same kind of growth, say 14-15%, let's be optimistic and say 14-15%. Do you think we may have to put up incremental capex, or what would be that key trigger when you will take that decision, whether to increase capex, and if it is to increase capex, how do you increase capex? Your own, or you use some affiliates, associates capex? That's
So,
my first question.
so there's three things on this. So one is debottlenecking. Second is also optimizing our ancillary network that we have near our factories. Third is, as we see the growth kicking in and the utilization kicking in over 95%, we definitely feel that we are exploring capex. But yes, there's something that we are very, very clear about: the prudence on IRR and the ROCE. And if there are opportunities, because there are opportunities owing to the displacement of different countries across, where India will hold a very good opportunity here. So definitely that could be something on the cards. We are definitely exploring that, and we will look at the prudence of ROCE and IRR here.
Okay, ma'am. Thank you, ma'am.
Thank you.
Thank you. The next question is from the line of Prathamesh Sawant from Axis Securities Limited. Please go ahead.
Thank you. So congratulations on a good set of numbers. So now my first question was with respect to the existing Australian FTA. Do we have any advantages from them, and are we perceiving anything happening over there?
Yeah, Australia has been a very interesting market. There are two things that have worked for Australia and India. One is the FTA. The other is the relationship of Australia and China. So that actually has put India at an advantage. And for Welspun, of course, we have seen an opportunity here, not only in home textiles, but in the retail segment, but also in the hospitality segment and also in the flooring segment. So yes, there is something which we see as an upside there.
Okay, and do we have any demand traction or client, any leads over there working for it?
Yes, absolutely. We have our retail relationships that we have. We have our hospitality relationships and the flooring relationships also that are there. And Australia will be an advantage for, and the FTA has been an opportunity for us and as well as India.
Okay, that's clear to you. Secondly, ma'am, with the current flooring segment doing really well, so just wanted to understand on the granularity of the US order. So is it from like 2 or 3 big customers, or it is more granular than that?
So it is a mix of all, actually. So the opportunities, first of all, the mix is hard flooring and soft flooring. And it is a mix of, the distributors and now also the retail channel that we're talking about. So and that is going to continue to evolve. And also owing to the whole China opportunity, we definitely see an upside here.
No, my question was with respect to the current significant ramp up in the US export revenue, especially in the flooring. So was it particular to 1 or 2 big players, or was it more granular?
Yeah, it is owing to not just 1 or 2 players. It is a mixed bag, and it is more granular here. It is not just 1 or 2 who are contributing to this. And then and also going forward, there'll be more newer customers adding to our kitty.
Okay. And are we focusing B2C over there for flooring?
No, not yet. The B2C will not be something. It will be purely B2B that we are going to be focusing. And actually, let's face it, flooring is basically primarily a B2B kind of a segment. Yeah.
Okay. And then lastly, one last question from mine is your outlook on the cotton prices. Are we expecting any gross margins to remain stable over here?
So we are maintaining our margins that we've already spoken about, and cotton prices, are we looking at where we are today, they are going to be around 61, 62 thousand, and that's what we are looking at an outlook at the moment.
Because there were talks meanwhile where the prices were climbing to 85,000. So we are not experiencing that.
No, not at all. Not right now. So definitely the opportunity. We are seeing the weather has been a little incremental. There has been pink bollworms that we have seen, but it is also the supply and the demand. And we are looking at an outlook which is looking at around 61, 62,000.
Okay. Thank you, ma'am.
Also, Prathamesh, we have cotton in stock with us for next 4 months. We are keeping a close watch on the cotton prices. We have systems in place to take steps necessary to ensure that, we are not caught off guard on this. So, yeah, no worries on that front as of now.
That's great, sir. Thank you.
Thank you. The next question is from the line of Iqbal Khan from Nuvama. Please go ahead.
Yeah. Hi. Hello, ma'am. Hello, sir. Firstly, congratulations for a very good set of results. Just one question I have on the export front. I wanted to know how is your export mix between US and Europe? I mean, obviously, a large chunk of the export goes to these two countries. Just wanted to know the mix of it. And also, currently, I think we are catering to Australia. So Australia is also a part of the export mix. So how would you divide your export mix in these three geographies?
So let's face it here, USA still continues to be a bigger chunk and will be, because USA consumes 34% of the global home textiles. So for Welspun Living Limited, it is around 70%. Now, when we come to UK and Europe, we will say the next 20% will be from UK and Europe. And UK consumes around 10% of the global consumption of home textiles. Australia, New Zealand, and rest of the world will be, say, around 5 to 7%.
Okay. Thank you, ma'am. Yeah, that's a good question I had.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company.
Yeah, namaskar, ma'am, and thank you for this opportunity. Ma'am, what should be our net debt number for FY24? What should be the closing number? And currently, what is our cost of funds?
Hi, Sanket.
Yeah.
Yes, sir.
So we closed Q2 at 1,573 crores. We have stated our objective to reach less than 1,000 crore by financial year 24 end. And our cost of debt is currently in the range of 6.5%.
Sir, in the cash flow, we have found that 158 crore is attributable towards government grant. So how should this number shape up for the second half, and what should be penciling in for the year as a whole? What factors attribute to this number, sir?
So it will remain in the same ballpark number. That doesn't change much.
So for a year as a whole, it will be closer to 310 crores. The government. It is the roadstep part, sir, or any other category?
It's roadstep and duty drawback. Yeah.
Okay, sir. And for the flooring segment, we found that for the H1, our utilization levels have reached 63%. So what should we exit for? Hello?
H1 is Q2 is 63.
Q2
H1 is about 54%. We should be in the overall year should be around 60%.
And what should be, sir, for the next financial year?
So we will continue to grow our capacity utilization. I can't give you a number at the moment, but
it will grow from here. Yeah, it will only going from here.
Yes.
And it is one more point was mentioned for asset held for sale. So if you could throw some more light, what are those, and when are we going to realize what should be the value?
So we are moving more and more away from traditional energy, and hence we are offloading those assets. So we have sold our 12 megawatt power plant, and we have sold our boiler for the plant. So this will be done within this year, because some approvals are required from the government, whoever purchases it. So those approvals are pending. So once those approvals are in place, we will effect the sales. So we have taken the board approval for it.
Ma'am, in your opening remark and also to your reply to earlier participant, you did mention about a cautious outlook, but still maintaining a top line growth of 10% and with the EBITDA numbers at 15%. So if you could just outline to us what are the factors that give you the confidence? When we look at the US economy as a whole, the inflationary trend, the age at 5%, the talk of liquidity crunch. So what are the key factors that are attributing to this growth and the continuity of the same? If you could throw some more light.
So here I think for us we have seen that the retail has been a little resilient here, and also owing to our replenishment program. So for Welspun Living Limited, our 70 to 75% businesses are replenishment businesses. So that gives us the confidence here, and with the order portfolio that we have, we will maintain the commitment that we have put across.
So this interest rate scenario remaining at say 5% or at higher level, won't this lead to a dent in demand and going ahead that may lower the demand outlook even for the replacement segment? How should this higher interest rate scenario going to affect the segment as a whole? What should be penciling in going ahead?
So the challenges are there. We have already seen the economy the way it is. But I can just tell you for Welspun Living Limited, the opportunities that we have seen is that we have worked very, very focused last year on getting the share of shelf. So whether it's in the terms of private label, in the terms of our licensed brands as well, along with the kind of mix of the products, whether it is a towel, sheets, bedding, and rugs. So that is the opportunity that we have, and also in the different channels of growth that we're talking about here. So whether it's a discounter, so we see an opportunity here in that terms to look at our top line growth of around 10 to 12% and an EBITDA of 15%.
Yes. Thank you, ma'am, for the answer, and it's really commendable on the set of numbers and the guidance which provided by the team, and all the best, and congratulations and happy Diwali to the team. Thank you.
Thank you. Thank you. Thank you so much.
Thank you. The next question is from the line of Prerna Jhunjhunwala from Elara Securities Private Limited. Please go ahead.
Audible?
Yes.
Hello. Yeah. So, ma'am, I wanted to understand the flooring business outlook with respect to markets, especially in terms of exports and domestic and B2B domestic, how things are shaping up, and in the branded space, how flooring business should shape up going forward. What is the kind of traction we are getting in this segment on the branded front as well?
So first of all, when I look at the global landscape in the terms of private label and branded, so America is going to be the private label one. And when you talk about branded, it is going to be the Middle East and India, right? And it is primarily B2B, okay? Now, when I talk about USA, the opportunity definitely is there, and that, again, I will reinstate that we looking at the opportunity that Welspun has. It is one of the green facilities and one of the most modern plants in this part of the world, which actually is a great opportunity for us. Along with that, the indigenization of the supply chain for Welspun will be a great criteria to get the businesses in America. And the businesses will be a mix of soft and hard flooring. And the whole traceability is something that Welspun has an advantage against the other countries which actually are challenged because of that. Now, when I come to India, India is something that we are seeing a great opportunity in the terms of the B2B businesses. That means more than the residential right now, we are looking at the institutional and the hospitality segments. That again is a great opportunity, and we'll see that grow, going forward as well. And that's where it is, Prerna, at the moment.
Okay, ma'am. When do you think we should be? We've already reached a run rate of around 1,000 crores. Do we see this run rate reaching 1,500 to 1,600 crores in the next 2 years?
See, I'll tell you one thing. Let's share this with you. I think we have a great opportunity in this flooring business. Having said that, the 1,000 crores is the first stop, and then 1,500 crores. And I think sky is the limit for this flooring business, because I think India has a great opportunity towards growing this. So yeah, definitely, Prerna, we are exploring a very ambitious goal towards here, which we'll share when we meet.
Okay. And In terms of festive season sales that we would have seen during e-commerce sale period and the Navratri period, any color that you are getting in domestic market, how home textile branded demand is moving in India?
So I'll tell you one thing here. So till August end and September, the businesses had been they were running at a very tepid pace. You know, the charads were on. And the interesting thing, Prerna, this time has happened that Diwali is coming a month later. Usually we would say that the quarter two would actually have the sales because the Diwali would have been in October, right? Now this time the Diwali is 1 month later. So now the sales are picked up. And we are seeing, the weekends now giving a growth, of over 50% here. So yes, now the momentum has come in and the festive season has started kicking in. Earlier it was slow.
Okay. This is helpful, ma'am. Thank you.
Thank you, Prerna.
I'll come back to the question queue.
Thank you.
Thank you. The next question is from the line of Reshma Jain from DSP Asset Managers. Please go ahead.
Yeah, hi, Resham Jain here. So I have just one question. So if I look at the numbers historically, you have it seems that the OPEX has been controlled quite well. But if I look at the gross margin profile, it used to be 50% plus minus. In good times, it has gone above 50% as well. But now, let's say last 2 quarters, we are seeing your gross margin anywhere between 46-47%, which is 300-400 basis points lower than what you used to do before COVID. Obviously, it has improved compared to last year because last year had a lot of challenges. So how should one look at your gross margin profile going forward? Because 18-20% used to be the gross margin profile earlier. There is a mix of kind of flooring also coming in. But even if I adjust your gross margin, your overall EBITDA margin seems to be lower than what you used to do earlier.
Hi. Yes, so you see more and more our emerging businesses are growing. And so this is a blended margin of our home textile core business and the emerging business. So as the emerging businesses will reach a certain size and profile, the margin will of course increase. So currently they are giving lesser than the core home textile margin, and hence the consolidated margin is coming lower. But as they start contributing more and more, as we are seeing in flooring as well as in domestic, this margin profile will go up. Yeah.
And the home textile will maintain a number of around 17%, 17 to 18%. Yeah.
Okay, and home textile business, because it has a contribution from the domestic piece as well, which I think it is in the building phase, so probably margins must be lower there. So if one looks at the export home textile business, would the margin be similar to what you might be doing, let's say 3-4 years back, 18-20% range?
Always in the same range, so about 17-18% currently, because as I said, the cotton is at an elevated level. We had cotton at 40-45 earlier, now it is at 60. So of course, with cotton at such an elevated level, the margin, on the denominator-numerator basis, it's slightly affected, but we are in the same ballpark.
Okay, understood. Thank you so much and all the best.
Thank you. The next question is from the line of Nirav Savai from Abacus. Please go ahead.
Yeah, thanks for the opportunity. My question is regarding the flooring business. So just wanted to understand what's the addressable market size which US has right now, and when we look at the global supply chain, how much China would be contributing in the flooring part of it?
Yeah. Hi, Nirav. So flooring see, the total size of flooring in US is $90 billion, but our addressable market is about $10 billion. Out of that 10 billion, China would have a 50-60% market share currently.
Okay.
We have just started, so we are relatively smaller, but we will continue to eat into the other shares, and hence we are seeing that the market opportunity is very large.
Right. The second question is when we look at cotton prices, the last 6 months they have come down. So do we see price cuts coming from our customers? They are negotiating lower prices for forward contracts?
No. So the cotton price has remained now stable to some extent, and so the prices with customers are also stable. So on cotton basis, there is no price change happening at the moment.
Okay, that's it from us. Thank you very much.
Thank you. The next question is from the line of Iqbal Khan from Nuvama. Please go ahead.
Yeah. Hi. Thank you for allowing me for the second question. So just wanted to understand the sensitivity part. So, I mean, current cotton price is around 62,000, right? So what is the fluctuation or what is the pricing wherein, you take decision on the price cut or price hike, and how does it impact your volume as well? So just wanted to understand the sensitivity part of this.
Iqbal, it's not a simple cut and dry. So lot of discussion keep on happening with the customers, and customers are also in the know of what's happening. So it's not that
So here I'll tell you one thing, Iqbal. I think this is a very clear visibility, the way we work with customers in collaboration. And the cotton prices are absolutely visible to everybody here. And that's what we work very closely with our customers. So the cotton prices are around 62,000, and I think this is what we are seeing even going forward. And there's also there's a way that we work where we constantly are in touch with our customers on a regular basis on anything in the commodities, whatever it is.
Mm-hmm. So at times of higher cotton prices, the negotiation power of the customer increases, and because of which there is some kind of price cuts that can take place and which can potentially impact your margins. This is what I wanted to understand. So what kind of negotiation takes place, and to what extent the negotiation takes place?
So Iqbal, we work on long-term basis with customers, and customers also understand that what is the profitability, what is cost, what is cotton cost. So we work as a partner, and there is no undercutting by the customer. So there is no chance of a margin loss because of this.
Okay. Thank you. Thank you, sir.
Thank you. This was the last question, and I now hand the conference over to the management for closing comments.
So thank you, everyone. It's heartening to see the fruits of our hard work reflected through the highest ever quarterly revenues and increased market shares in all our business verticals: home textile exports to US, flooring exports, domestic and advanced textiles. New and increased order flows from marquee retailers shows their trust and confidence in us, which is further strengthened. Our global brands continue to give us an edge through innovative products and alliances. Flooring business has started pulling its weight slowly but steadily. Domestic business continues to scale newer peaks through cementing its leadership in reach, distribution, and brand identity, which augurs very well for opening up doors for high sustainable growth and market share. In ESG, our commitment is unparalleled, and a move towards achieving renewable energy targets by 2030 will further strengthen our leadership in this area, along with substantial cost savings. We continue to be cautiously optimistic on the back of the disturbed global economic sentiments that we are witnessing, and are committed towards the revenue and profit guidance we have already provided for FY24. Welspun is also committed towards reaching a healthier, sustainable ROCE to create substantial value for our stakeholders. Thank you for your continued interest in Welspun Living. For any other queries, please feel free to connect with Salil and Sanjay.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.